everyone, this is a trader and investor. In this video I'm going to talk about spies and turning points, because every turning point has a story. Every turning point is a turning point for some reason, and we will identify those turning points. It's not guaranteed. This is not a recommendation. I'm just showing you that there are ways to identify possible turning points, and we take advantage of those turning points. That's really what I want to show you. So today the markets gapped up significantly, right? They gapped up, but they did not stay up in that region for a while. So first thing that happened is they gapped up, and yesterday we had this supply zone identified where price pulled back from a rally. It pulled back, created this supply zone. It tested that supply zone and went down again, but then today it gapped up above that supply zone. So today, as the first hour or so started to play out, price started to fall. So first thing identified is we create this supply zone again up here. Now keep in mind that what I said yesterday. In a strong uptrend, do not counter trend. Do not use the supply zones as an entry to the downside. I prefer to just play with the trend, and as you get better and better, as you refine your strategy and as you refine your timing, you can try counter trends and for short burst in and out scalping. But again, if you have a day job, this is kind of like a side hustle for you. Do not worry about counter trend. Do not worry about being glued to the chart. So just focus on following the main trend. But here, as price is forming this supply zone, what I want to know is, where is the market going to turn around? Where is it going to have a turning point, right? Where is that story? Well, that story begins with this gap. From yesterday's closing 15-minute high to today's first hour 15-minute low, we have this gap, this imbalance. Price has to fill that imbalance. Right now, between buyers and sellers, there's a huge imbalance. I know some of you will say, well, if I look at the extended hours, I don't have that imbalance. Price sliced through it. Well, an imbalance is actually formed between 3 bars, and so the high of 1 bar and then the low of the second bar to its right form that imbalance. So even in this space, you can create an imbalance. So it doesn't matter whether you look at extended hours or you look at regular hours, because you have this imbalance. And if we overlay the two imbalances and remove the extended hours so that we can see it clearly, if we overlay the two imbalances, what we see is that price has a tendency to close at the very minimum 50% of that imbalance. So as we saw it this morning, it closed at 50% and reversed. So this is the 50% line, this yellow dotted line, and this bar here went past it and stopped, but it continued to go down. And where did it go down and why? Well, that story is going to continue, and at times we'll close the full imbalance. So if you have looked at just the regular trading hours, at the bar that turned around, this bar here, this indecision spinning top bar, price went to the bottom of that imbalance and it reversed, and boom, done. If you looked at the extended hours, and when we drew it a little bit lower down here, and you will see it here, this is where we drew it, then price came to that 50% of this extended hour imbalance. Either way, like I said, it will come to, most of the time it will come to at least 50% and at times at 100%. So depending on where you drew your imbalance, both these imbalances lined up beautifully. Therefore, you have either at the 100% price reversed or at the 50%, depending on which imbalance you looked at. And I prefer to just look at the regular trading hour imbalance, and we've covered the full 100%. And then price is stalling at yesterday's high. And the other thing is this imbalance area lines up beautifully with the 15-minute range high of yesterday. When you have a lot of confluence, a lot of things lining up properly, the close of yesterday, the 15-minute range high of yesterday, the high of yesterday, a lot of these things, when they start to line up, it's a very good indication, right? And so I'm zooming in so you can see a little bit better. Maybe this orange dotted line, the close of yesterday, very hard to see because it is lined up. It is lined up with our imbalance. The high of the last 15-minute bar and the close of yesterday, very, very closely aligned. That's why it's kind of a little bit hard to see. But so all of these things, 15-minute range high, close of yesterday, the imbalance low, all of these things line up. That's the story. This is why price is reversing. It's not reversing for just no reason. And there's trap that just happened. There's two traps here. Manipulation. Price dead stopped here 2 bars in a row. So people will say, hey, I'm going to go long, but I'm going to have my stop right at the other side of this. Well, this 1 bar took care of you. All of those people who tried that. Anybody who said at the break of this, I'm entering to the downside, well, this same bar took care of you because it reversed and never went back down. So that's why I mention manipulation area all the time. Be careful, do not get manipulated. This was not a big manipulation because anybody who went long would probably not have their stop this tight. So if your stop was somewhere down here, you are safe. But if your stop was extremely tight, this is where you're in a danger zone. And always, always, always give room with your stops, right? Give some wiggle room. Find a logical area and give a little bit of a wiggle room. So then, as you see, this is the story. We have this imbalance, lines up with yesterday's close, lines up with yesterday's 15-minute range high. We stop there. And then once price reverses, where does it stop? At the high of yesterday. That's why these turning points, they just don't come out of thin air. There's something to the left. Look to the left. The story will tell you. The narrative will be there for you to say, hey, here's where I'm going to turn. And now this zone, this consolidation that's happening here, it could take us here or it could take us here. We don't know, but we're forming lower highs and we shall see what happens. And as you look at any oscillators that you put in place, my oscillator here is almost flat when price is going slightly up. So even this is a slightly upward direction. So I'm not too concerned about this oscillator. I'm not saying this is a huge divergence, but it was kind of a warning sign. But mostly is when price fails to continue to push up. When price fails to continue to push up, then you want to see where is a possible area that is going to come down to. That's what you want to look at. And you can even add to your analysis always any Fibonacci retracement. So from yesterday's closing bar low to the first 15-minute bar high, we came down to 70% and reversed. A lot of these alignments. Now, if we had gone past the 78.6% retracement, then all bets are off. We're starting to head down to these other demand zones that we drew yesterday and the day before. So for now, here's a lot of confluence that we continue to see, and price is doing what it's doing. So I just wanted to add this little bit of analysis to the demand zone, supply zone discussion of this week. All of your trading, 15-minute range is very important, and I'm just giving you additional tools to help you see potential turning points. And right now, we have a headwind. So price, as it continues up, it will have a tendency to kind of slowly work its way back up, because this supply zone could act as resistance. Very short-lived possibly, because we're in an uptrend. How do I know we're in an uptrend? Well, I just look at, the hourly chart or the daily chart, and based on what the charts are telling me, this is what we are doing for now, right? That's all we are doing for now. And based on that is when I will say, okay, I'm in an uptrend. I'm not entering any position to the downside. All right, everyone, now that you know the story behind every turning point and how to identify these points, I think it will make you a better trader. All right, take care for now, and I'll see you in the next video.